Hi, and welcome back to Small Caps. My name is Jess Furtick, and today we are having a conversation with Zack Bozinovski from Wellnex Life Limited. The ASX ticker code is WNX. Hi, Zack. It's great to have you on the show with us today.
Hey Jess, good to see you. Thank you for having me on.
Now, Zack, you've just reported an extremely strong quarter, especially on your sales and your cash metrics for the last quarter. But before we get into the details of all of that, I thought it would be a good idea for you just to provide a brief overview of the business. What are your products, brands, and also what the opportunity is that you see in the wellness and health space.
Yeah, we're Wellnex Life. We released it on the ASX back in July 2021. We're a health and wellness company, and we play in three key categories. Analgesics, we play in the vitamin space, and we also play in the topical health space. We do have a teeth whitening brand as well, which is primarily an online play at the moment. But as a company, we're all about health and wellness and enhancing people's quality of life and how they feel. We've been going, as I said, since July 2021, and as a business, our focus is to just continue developing innovative and new products that are either ideally first to market or fast to market. And the lifeblood of our industry in grocery and pharmacy is all about innovation. And consumers love innovation, and retailers love innovation. So that's where the business is being built on, and we continue to look for those opportunities going forward.
Fantastic, Zack. And now you've mentioned that Wellnex was listed in 2021, sorry.
Yep.
And so what are the key achievements that you've witnessed or had since you coming on board of the company?
Yeah, it's when we listed in 2021, we really were obviously a very young company. We had a few little bits and pieces happening. We're actually a brokerage business. We started off as a brokerage business, and the intention was to always go from a brokerage business, which is a high revenue, low margin business, into a branded business, which obviously, long term will have a very strong revenue base, but obviously have a lot more margins coming through our own brands. So over that period of time, we've launched brands like Wakey Wakey and Nighty Night. We've acquired brands like Pain Away and Mr. Bright. And we've also been able to procure some really strong supply agreements with global companies like Haleon, where they use our marketing authorised liquid paracetamol soft gels and other products we've developed as a soft gel to licensing both domestically in Australia, and most recently we exported some product into the UK. So yeah, the business is really all about that whole innovation piece. And if you look at our history over the last 3 years, everything we've really done, I suppose, apart from acquiring Mr. Bright, is new and innovative and exciting going forward.
Well, Zack, your sales revenue has been, extremely, impressive. What's driving the demand, do you think, for Wellnex's brands?
Yeah, I think we're just in the right categories, Jess. I think if I look at Pain Away, it's a topical pain relief brand. It's about $110 million category in Australia. I mean, we've all got aches and pains, and that category continues to grow. If I look at products and brands like Wakey Wakey, it's an energy brand. Again, consumers are really looking for that bit of an edgy kick during the day or in the evening. You get home from work and you're feeling a bit tired, so you need that energy kick to deal with the kids, or do the garden, or cook the dinner. And then commercially, we've got a brand like Nighty Night, which is all about aiding people get a better night's sleep. They're categories which consumers are resonating with, and they're categories that are certainly growing, especially within the vitamin category. And we've been fortunate enough to develop some really good brands, get some really great distribution, and so that all adds up to continued ongoing revenue growth.
Yeah, fantastic, Zack. Now, you've mentioned those product categories and demographics that are experiencing the most growth, but how are you sort of leveraging this or tailoring your strategy to capitalize on those areas specifically? You mentioned Pain Away and a couple of your other brands, Wakey Wakey.
Yeah. I mean, we're fortunate that we've also got some great relationships with the retailers in Australia. So we are always working with them and looking at what the next opportunity is. Is it a new flavour? Is it an additional type of effervescent? From a Pain Away perspective, when we acquired the brand, it had very limited distribution in supermarkets. So over the last 12 months since we acquired the brand, we've gone into the retail and shown how well the brand performs in the pharmacy channel and how it's under trading in the grocery channel. And we've managed to get incremental distribution, which obviously drives additional revenue. And from the other brands, we're being strategic in how we advertise, how we create the consumer awareness of the brands, and we're doing some export revenue with Pain Away. I'm over here in London at the moment as part of a capital raise, and I'm looking, talking to distributors about launching our products in the UK market. So, we look at our brands, we look at the categories, we look at the opportunity, and if we think we've got a strong right to succeed for our brands, we'll pursue that opportunity. But if we don't, if we think there's a risk of those brands not succeeding, we'll certainly stay away. So we're being very conservative on the one hand in targeting those categories, but on the other hand, we're also encouraged by what those brands have done. And again, Pain Away is a 25-year-old brand. It's been through the ringer over 25 years. Wakey Wakey 99, they're only really 1.5, 3-year-old brands, very new to the market. They're very still early in the steep curve of growth. So we're really excited to have such growth for these very young brands as well.
Yeah, fantastic, Zack. Thank you. Now, there's a contract manufacturing aspect to the business as well. Can you tell us a little bit about how that works and also who some of your clients are?
Sure. Our mantra is that we're more than happy to sell obviously our brands, and if we have some special IP about certain products, we're happy to share it with other partners domestically and again internationally. So I suppose the most known we're for is our partnership and contract manufacturing arrangement we have with Haleon. Haleon is a major global player, and probably back in 2021 we launched our liquid paracetamol soft gel with Chemist Warehouse under a brand called Wagner Liquidgesic. It was on the shelf for a month or so. We got a phone call from Haleon in Australia and said, hey, we'd love to talk to you about a liquid paracetamol. And as I said, I've always been of the opinion that, if the opportunity presents itself, you should always, be able to supply your product to other partners. And strategically, we commenced that process in 21. In 2022, we started supplying the local market. And in last year, in 2024, October, we started shipping the same product to the UK. So as a business, we're more than happy to share our marketing authorisations in this instance with companies like Haleon. In return, obviously, they give us excellent revenue and opportunities to continue to expand that product format into other parts of the world as well.
Yeah, fantastic, Zack. Now, we know the UK order with Haleon was a significant win for the business, obviously. Is Wellnex pursuing, further international expansion, and what regions are you prioritising?
Okay, so I'll split that up into two parts, Jess. So from a contract manufacturing perspective, we're certainly exploring and having dialogue with Haleon and other companies about taking those products that we've marketing authorisations for in Australia into other markets, into the European market. We're also looking at the Asian market as well. So that dialogue continues all the time, and we're very excited and appreciative of the partnership our partnership with Haleon and the opportunity to continue to grow revenue. From a brand to business perspective, we just got Pain Away into New Zealand late last year. We're now, we're looking at getting the Pain Away brand and the Wakey Wakey 99 brand into the Asian market. So we're again working with some distributors there. And as I said, I'm really excited to say that we're very close to hopefully appointing a distributor over the next couple of weeks, where they can help us take Pain Away, Wakey Wakey and 99 in particular into the UK market. And as part of the due diligence we've done there, they will also probably help us take those three brands into 4 other European markets, Italy, France, Germany, and Spain. And because, again, we generally believe our products have a strong right to succeed in these markets. So, yeah, we're definitely looking at the opportunities internationally, both from a contract manufacturing perspective and a branded perspective. And I think, Jess, that's one of the strengths of our company is we have a diversified revenue portfolio. So the contract manufacturing, which ticks along beautifully for us. We've invested a lot of money in developing those products. And also now, we're excited to continue to grow the wealth and the value in our brands, not only domestically, because there's still a lot of low-hanging fruit domestically for those brands, but it's pretty much the right time now to start exploring the opportunities overseas.
Yeah, fantastic, Zack. I mean, you sort of answered my next question to an extent, but you mentioned Pain Away entering into New Zealand, Wakey Wakey into your Asian markets, but your Pain Away brand, it's far more advanced in comparison to some of your other brands already, so it's really matured as a brand.
Yes.
What is the growth trajectory that you expect for your other brands outside of Pain Away? Do you expect the same growth trajectory?
Yeah, look, I mean, Pain Away is an established brand, and if you're doing double-digit growth on an established brand, that's quite good. Our scan sales are showing that we're selling more product out at the back end. Consumers are buying the product. So from a Pain Away perspective, we still see a lot of upside, Jess. When we bought the brand, there was a lot of low-hanging fruit. Again, we're gaining a lot of incremental revenue in supermarkets. So that's ticking along nicely, and it actually balances very nicely with our young brands, which are showing tremendous growth. And for us, whilst we look at, obviously, ex-factory sales and revenue sales, what's really important to me is that product is actually selling off the shelf. So, off the Coles and Woolies and Chemist Warehouse and Terry White and Priceline shelves. And, that's the great part about those brands. They're showing strong growth going forward. And again, as a business, we want to keep investing in those brands. We've got line extensions, we've got sub-brands we want to launch underneath those brands. And there's some other brands we're looking to launch into the market in F25 as well. So, again, very blessed we've got a mature brand that's done a lot of revenue and will continue to revenue, but really excited before we can take these brands. And my experience tells me a brand that's 18 months to 3 years old, that's in a very, very early curve of growth. So we're very pleased and very excited with what those brands have delivered us so early in their lifestyle.
That's fantastic, Zack. And now you mentioned you're in London at the moment. Thank you so much for doing a late interview.
That's all right.
And you're doing a capital raise. Can you, let us know what is the use of funds for that? What do you plan to use the money that you raise from your capital raising?
Yeah, I mean, London, we've been here for about a week and a half now, and another week to go. But excited with all the investor meetings we've had here. So there's really two parts to the London trip. One is talking to people about taking our brands into the UK and European markets, but the majority of the trip's been around the capital raise. So we've made it public that we're looking to raise about £8 million, which is $16 million in Australian money. So it's nice how the money doubles when you convert it from pounds to Oz dollars. But literally, we've got a deferred consideration for the acquisition of Pain Away of approximately $6 million. So we'll use the funds to pay that down. We've got some convertible notes, which we're sort of hoping that a large percentage of those convertible notes will convert as part of the raise. But, whatever's left over, we'll use the funds to pay that down. And obviously, it's not a cheap exercise listing a company on the London Stock Exchange. So there's a fair bit of cost involved with that. So we use some of the money to pay that off. And then obviously use the rest of the money from a working capital perspective. As I said before, we've got a very strong NPD pipeline coming up ahead of us. And we really want to invest and support our brands. So investing our brands domestically, but also, again, some of that money we'll use to help launch into the UK and overseas markets as well. So, we've had a great amount of support from the Australian market, and we know we'll continue to get that support. The UK market really love the business model. They love our brands. They really understand the relationship with Haleon and what that means for a company like Wellnex. It's amazing. I go to these meetings and with investors, and they look at you and they go, "How do you guys, micro cap from Australia, end up supplying a global giant like Haleon, and they really understand and appreciate that not many companies in the world get a chance to supply Haleon. And so, raising the money to continue to invest in developing products that potentially Haleon might take in the future is what it's all about with those funds. So we want to be prudent. We want to invest wisely with those funds and not just, have a scattergun approach with what money we raise.
Yeah, fantastic, Zack. And for some of our small caps audience who aren't familiar with the business, the company is pursuing a dual listing in London. Can you tell us a little bit more about that and why the company is looking at doing that?
Yeah, look, as I said, there is definitely more funds available in London. It's just a much bigger place, and there's a lot more investors. But being a dual listing, you'll be able to trade the shares. If you're in the UK, you can trade the shares in Oz, and if you're Oz, you can trade the shares in the UK. And it just gives us that extra credibility by being on the AIM in the London Stock Exchange, but also supports our intention to be in Europe. So it's a strong statement to say, hey, we want to be part of the AIM on the LSE. And as a matter of fact, we actually aren't just here to get some money to help grow our business. We actually want to use that money to invest both domestically, but also to help funnel and fuel the international growth strategy as well.
Yeah.
So investors will be able to also participate, and there'll be some more news come out about that over the next couple of days. But overall, the raise will benefit the company, clear up the balance sheet, and really help springboard us to our next position of growth.
Yeah, fantastic, Zack. And assuming the health and wellness market in the UK or in Europe generally is a far more mature market as well. So
yeah, exactly. I look at it, 25 million population in Australia. UK is about 75 million population. The dynamics in the categories are very similar. If I look at the Panadol brand in Australia, very strong. The Panadol brand in UK is very strong. So we know, what type of revenue, that they'll probably generate from using our liquid soft gels. But also, again, as part of the visits we've been making to Europe over the last 12, 18 months, we've identified that UK, Spain, Germany, France, Italy, those markets actually really would suit our products. So not every market in the UK is going to be great for all of our brands, but with our potential distribution partner, we've identified those 5 markets in particular that we certainly believe will have a strong right to succeed with the launch of our brands.
So good, Zack. Certainly heaps of catalysts for, growth in the business and lots of exciting catalysts coming up. So it was so fantastic to talk to you, Zack. I just have one more question for you. Can you provide our small caps audience with just 2 or 3 key investment takeaways?
Yeah, sure. I've probably got more than 2 or 3, Jess, but I'll keep it short. Our revenue is growing and will continue to grow. We've got the international expansion on the horizon, and we've got a great company that develops and produces great products. The relationship with Haleon is a testament to that. So we are a young company. We're 3.5 years in, but we're on a really exciting journey. And, we're really grateful for all the support our investors have given us, especially back home in Australia. But certainly we've got some strong aspirations. And, we're not going to go scattergun approach. We're not going to be arrogant about how we go about this. We're very considered. We've got a method in place. We've got a business strategy in place to increase the revenue of the profitability of the company. And so I think, again, if I can summarise, international expansion and great relationships and great people in our company is what's going to excite investors in this business.
Fantastic. Thank you so much, Zack. Congratulations. All the best for your cap raise in London.
Thank you.
And safe travels back home to Australia.
Thank you very much.
Really look forward to having you back on the show again soon, Zack.
That'd be great. Thanks, Jess.